Hannah Barry for Moneyweb. I'm talking to Johan van Zyl, the Group Chief Executive Officer of the Sanlam Group. Sanlam issuing its interim results this morning for the 6 months to the end of June. Johan, some strong results despite Sanlam's largest exposure being to a very challenged South African market.
Yes, we're fairly happy. We've seen well over 40% operational growth on the previous year. So overall, something that we're very happy with, particularly the emerging markets component. You've mentioned South Africa being under pressure. We've done well, but of course the blinder came from the African business, India, Malaysia, those new investments, places that we've entered into the past few years.
Well, speaking about those countries, Sanlam deploying about 1.8 billion rand toward various acquisitions in its emerging markets in Malaysia, the rest of Africa. South Africa, though, still contributing 65% to group profit. How do you hope that figure will change in 5 years' time?
Well, if you just progress it, I mean, we would like the businesses, the high growth areas, to contribute closer to half in the next 5 years. So we'll be spending quite a bit. You will see that we have about 3.3 billion rands earmarked for additional acquisitions. We really have our eyes on one or two opportunities in Africa. And then, of course, the Indian foreign direct investment limit of 26% will be lifted to 49%, and there we'll spend around R500 million, increasing our stake in that business.
Are you completely confident that that is going to be lifted? I mean, I understand India has got a new government, which is a lot more sort of encouraging toward foreign direct investment into the country. Is that a cert? Is that,
Nothing is a cert till it's been there and it's been signed and sealed. So, but I think we've been waiting for a while, and I would give it about an 80% probability.
If it doesn't happen, do you have other sort of areas where you could invest that capital?
Yes, no, we will set. I think there's a good pipeline of projects and opportunities that we can, well, much bigger than what we have available.
Looking locally, insurance companies in South Africa, of course, facing some really significant regulatory change from, move toward a risk-based capital regime in SAM, Solvency Assessment and Management, treating customers fairly, and RDR, the discussion paper for which we still are waiting for with bated breath. Just on treating customers fairly, how is Sanlam embedding that into its culture?
We've had a strategy for more than 10 years now of what we call client-centric, business operation, which in today's terms translates into treating customers fairly. So we've been at it for a while, trying from a very, I think, unfriendly sort of a business environment to become much more tuned into our customer, doing the right thing, looking really at maintaining business, trying to get your retention rates up, trying to do the right thing, not trying to sell to people who can't afford things going forward. And if you look at our persistency levels, and so these things are coming through. So I think we stack up well, but there's always more than one could do. And, a big part of this is incentivizing our people to do business with us, rewarding them through lower premiums or through other kinds of rewards if they do the right stuff, save properly, don't claim too much and things like that.
Is there still potential for growth in South Africa in the segments that you're operating in, and are you looking to other segments locally to grow in?
Yeah, I think a big part of the growth market is still the lower end of the market. I mean, we've had a few setbacks with the strikes and so, but now that they're behind us, we're looking forward to at least a 15% growth in that segment. The high end of the market is also growing fairly well. People have been saving within a pension fund for a long time when they're close to retirement and at retirement. They take that lump sum, they have to put it with somebody. We get a fair amount of that money. And these are two areas that we would like to grow at least, the lower end of the market, the higher end of the market, at least in 20-25%. The middle market, I think, is a bit more mature.
Significant impact coming through from pension fund reform and retirement reform. There's a whole host of changes that the government is introducing. Where is Sanlam feeling that the most?
Well, I don't think all of it is negative. A lot of that is based on people saving more. If people have a bigger pot of money, we have a big market share of that. We'll manage more of that, and we'll be better off. So, you know, people tend to focus on the one or two negatives, but if we get things like, preservation in there, people can't, once money is in a pension fund, they can't withdraw it every year when they change jobs. They build up a big volume. Or there is compulsion, everybody who works has to save in a formal pension fund. These things will have massive influence, positive benefits on us. So our employee benefits business is a key part of our future, and we'd like to grow that and use that as a growth base. We were big in the, 20 years ago. We lost a little bit of market share, and we're getting back in there. So things look good.
Johan van Zyl is the Group Chief Executive Officer of Sanlam.